Hello guys, my name is Mutsawashi Mbaiwa. I'm a lecturer in the Management, Accounting and Finance Department, and today I'm going to revise with you the ITC 2019 June exams mock 2 math paper required C. So required C part 1 wanted us to discuss the accounting treatment of the guest for life membership for the year ended 31 December 2018 with 20 marks, and required 2 for us to discuss the IAS 12 tax implications resulting from the prepayments by the guest for life members as the 31 December 2018. Now, required C part 1 wanted us to discuss the accounting treatment. So the accounting treatment should tell us how we recognize and how we measure and record the guest for life membership program in 2018. So for us to be able to do this, we go through the specific section from the scenario which I've scoped out under the heading Hotel Membership Strategy. That's where we're told information for the guest for life membership. So as you read through, you can establish that this strategy was part of how First 21st wanted to raise additional funds for its business. So the most appropriate approach to this question was use of the IFRS 15 principles to help us determine the accounting treatment for the guest for life program. So if we go to our IFRS 15, we first of all need to identify whether this guest for life meets the recognition or is within the scope for under IFRS 15, and it definitely meets the scope in IFRS 9, which is covered in IFRS 15. And then from there, after we establish that is within the scope of the IFRS 15 coverage, we now needed to evaluate the five-step model. The five-step model in establishing or in evaluating or in discussing rather the accounting treatment for the guest for life membership. So our five-step model, we needed to first of all identify the contract, whether it means the definition of a contract as the IFRS 15. From there, which is step 1, identify the contract. From step 1, step 2 wants us to identify the separate performance obligations. So if we refer back to our IFRS 15 paragraph 22A, gives us how we identify whether the performance obligations are separate, and from there it says the goods or the service being provided should be distinct. And for us to establish whether it is distinct, we go to paragraph 27 of IFRS 15, and from there paragraph 29 of IFRS 9 helps us in assessing whether these goods or services are separately identifiable, helping us cement or identify whether we should recognize the guest for life membership as one performance obligation or 2 or 3 or 5 performance obligations, depending on how or on what you came up with when you were discussing whether the performance obligations are separate or are combined. From there, we needed to identify or determine the transaction price. So the determination of transaction price is in paragraph 47 of IFRS 15, which is the amount of consideration which the entity expects to be entitled in exchange for transferring the promised good or service. From there, after we have identified the transaction price, as we are discussing, we now need to allocate the transaction price. So for allocation, which is step 4, the allocation of the transaction price. We go to IFRS 15, paragraph 73, which states that the entity shall allocate the transaction price to each performance obligation on a relative stand-alone selling price basis. So the relative stand-alone selling price is the price at which the entity would sell the promised good or service separately to a customer. So if you go back to the scenario, we are given information of the stand-alone selling prices, and we were supposed to use the information given there as part of our discussion in allocating the transaction price. And from there, we now need to recognize revenue, which is the final step in the 5-step model, which is revenue recognition. In revenue recognition, we only recognize revenue when the entity, which is 21st, is satisfied a performance obligation by transferring control of that asset to the customer, as per IFRS 15, paragraph 31. So we needed, as part of the revenue recognition, to ascertain is the performance obligation being satisfied over time or at a point in time. So this determination, you go to IFRS 15, paragraph 35A. And as part of the Guest for Life contract, there was a non-refundable interest fees. If you visit our IFRS 15, paragraph B49, it specifically covers the accounting treatment for non-refundable entrance fees, where it says the upfront fee, it represents an advance payment for future goods and services. So therefore, it should be recognized as revenue when those future goods or services have been provided. And further clarity is given in IFRS 15, paragraph B51, further clarifying how we treat the non-refundable fees. So this was the approach to required C, part 1, where you needed to discuss the accounting treatment of the Guest for Life membership, which takes us to the required C, part 2, which was to discuss the AIS 12 tax implications resulting from the prepayments by the Guest for Life members as at 31 December 2018. So if you go back to our scenario, paragraph 2 now says the introduction of membership proved popular with both the public and corporates, and 500 memberships in total were sold during 2018. Now the last sentence reads 100 members from this category paid in advance for January 2019. So in discussing the AIS 12 tax implications, now following the recent amendment to the Section 8 of the Income Tax Act, which covers the gross income definition, now ZIMRA and IFRS have now aligned their timing of recognizing prepayments. So to this extent, the prepayments will have a carrying amount. The carrying amount of the prepayments as at 31 December will be equal to the tax base of the prepayments as at 31 December 2018. So therefore, there will be no deferred tax or deferred tax asset or deferred tax liability for the year ended 31 December 2018. So there is no temporary difference since ZIMRA and IFRS have aligned their timing of recognizing prepayments. So this discussion alone would be able to make you earn 5 marks. So the grand total from required C, part 1 and part 2 would give us the 25 marks. So if you have any further questions after you have gone through the solution and after you have gone through this revision video, please feel free to contact us, that is manfin@caa.ac.zw, or you can come through for a one-on-one consult specifically for the paper, and please provide evidence of where you attempted the question and you've marked for yourself and you feel you needed extra help. And last but not least, you can also send WhatsApps. You can send a WhatsApp message and we can respond to all your WhatsApp messages. Thank you so much for going through this video. Goodbye.